Newton, Massachusetts, USA. Once a quiet and academic city, it has quietly transformed into a living laboratory where the frontiers of medical technology are being tested. And at the heart of this transformation stands one name: VSee Health. The company first captured the attention of investors and analysts alike when, one early morning, before the market even opened, its stock price skyrocketed by 160% in pre-market trading. No earnings report had been filed, no official statement from regulators, and no breaking news of a merger or acquisition. Yet within a few hours, trading screens lit up with a sudden surge in volume and price. Investors were stunned. What happened here? Became the question that dominated every trading desk conversation that day. That morning, VSee Health released a press statement announcing a strategic collaboration with Ava Robotics, a Boston-based robotics firm specializing in telepresence technology. The announcement described a vision of robots stationed next to hospital beds, controlled by doctors hundreds or even thousands of miles away through high-definition cameras and real-time interfaces. This was not merely telemedicine, it was robotic telepresence, the embodiment of remote physical presence in clinical settings. Under normal circumstances, partnerships like this remain conceptual or limited to pilot programs for demonstration purposes. They rarely lead to immediate commercial deployment. But VSee Health declared that its robots would be placed inside real intensive care units, ICUs, to assist clinicians. It was an audacious claim, one that, if true, would mark a first in the history of remote critical care. To grasp how unusual this is, consider that ICU environments are among the most regulated and risk-sensitive spaces in all of healthcare. Approvals for new medical devices or systems often require years of testing, documentation, and compliance with federal and hospital-level safety standards. And yet, the company spoke as though these hurdles had already been cleared. That was the first mystery. Had VSee Health truly achieved a full clinical deployment, or was this merely a prototype being described in future tense? The market didn't wait for clarity. The idea alone was powerful enough to ignite speculative buying, propelling the stock into one of the most dramatic pre-market rallies of the year. To understand how such a company reached this point, one must look back to the summer of 2024, when Digital Health Acquisition Corp., DHATC, a special purpose acquisition company, merged with VSee Lab and iDoc to form the new publicly traded entity, VSee Health, Inc. The deal was valued at approximately $110 million, and on June 24th, the transaction was officially completed. The very next day, the newly formed VSee Health began trading on the NASDAQ under the ticker symbol VSEE. Traditionally, companies born through SPAC mergers spend months, sometimes years, integrating systems, aligning accounting standards, and stabilizing operations before making ambitious public moves. But VSee Health was different. Just days after its debut, the company announced plans to expand aggressively into remote ICU, neuro-ICU, and cardiac ICU operations, as well as AI-driven telenursing and monitoring systems. Such a rapid rollout is highly unorthodox in the healthcare sector, where compliance, certification, and staff training normally dictate the pace. This speed, while impressive, hinted at a deeper tension, innovation at the edge of regulation. It was bold, but it was also risky. VSee Health's core product line revolved around a modular, no-code, low-code telehealth platform, a software suite that allowed hospitals to create and deploy telemedicine networks without writing a single line of code. Doctors could configure dashboards, connect monitoring devices, and manage consultations through a drag-and-drop interface. It promised seamless integration of AI-driven analytics, remote physical exams, patient engagement systems, and even virtual family participation for ICU patients. In theory, this technology could transform modern healthcare by decentralizing critical care and reducing the burden on hospitals. In practice, however, investors know that technology alone doesn't drive valuation. Revenue does. Potential must convert into profit to sustain market confidence. Then came spring 2025, and with it, the second mystery. VSee Health failed to file its mandatory quarterly 10Q and annual 10K reports with the SEC. Within weeks, the NASDAQ issued a non-compliance notice, warning that the company risked delisting if the filings weren't submitted within a prescribed timeframe. Ordinarily, a public company responds swiftly to such a notice, either releasing a corrective statement or explaining the delay. But VSee Health said nothing. The silence was deafening. In financial markets, a missing report is rarely a clerical issue. It often signals unresolved accounting discrepancies, internal control failures, or complications arising from mergers and revenue recognition. If the numbers don't reconcile, it's usually because the underlying systems don't agree. This wasn't a small oversight. It was a red flag waving in plain sight. The company's unwillingness to address it publicly only deepened the unease. Then, as if to counterbalance that negative perception, VSee Health made another surprise move. On October 21st, 2025, it announced a multi-year teleradiology contract worth more than $10 million. The deal, if authentic, could provide the kind of recurring revenue the company needed to restore credibility. Teleradiology, the remote interpretation of medical imaging, has become a vital part of modern hospital operations, bridging time zones and talent shortages in diagnostic medicine. However, this announcement too raised more questions than it answered. The company refused to name its client, disclose the contract's duration, or clarify whether there was a minimum revenue guarantee. Despite this lack of detail, the press release claimed that the agreement would double VSee Health's annual recurring revenue. That was bold, perhaps too bold. Typically, public companies wait until a contract is executed and begins generating measurable income before making forward-looking statements about revenue impact. VSee Health broke that convention. The timing was also peculiar. The news was released during pre-market hours just before trading began. Most U.S. companies release major news after hours, allowing analysts to review and assess the impact before markets react. Pre-market announcements, by contrast, often aim to capture immediate investor emotion. The result was predictable. VSee Health shares spiked sharply at the opening bell, but just as quickly, the momentum faded. To some, it looked like an orchestrated attempt to shift the narrative and reignite speculation. This became the third mystery, not about technology this time, but about timing and intent. Taken together, these events tell a story that goes beyond one company. It is a story about the tension between innovation and transparency, vision and verification. VSee Health's technology could genuinely redefine telemedicine, bringing critical care to patients anywhere in the world. Yet without financial clarity, without numbers, that promise remains unanchored. Every missed filing, every undisclosed contract, chips away at the foundation of trust upon which all public companies depend. And in a market driven as much by psychology as by profit, trust is everything. The significance of this case lies precisely here. VSee Health is not just experimenting with medical technology. It is unintentionally testing the limits of investor confidence. It reminds us that in modern markets, narratives can move prices, but only earnings sustain them. Until its financials are filed and the mysterious contracts yield verifiable revenue, the company will remain both fascinating and fragile, a symbol of how ambition and uncertainty coexist in the same balance sheet. Before we close, a brief message to our listeners. The ValueStir channel invites you to share the stocks or crypto assets listed, unlisted, or soon to be listed that intrigue you most. Your insights and leads often become the starting point for our next deep investigation, so please leave your thoughts in the comments. And to all of you who watch, subscribe, like, comment, and share our videos, thank you for your continued support. Your engagement drives this channel forward, and we promise to return that trust with even more detailed, revealing, and meaningful content. This was ValueStir.